Monday. And as we were coming into our Thursday afternoon and going into our Friday morning, we had completed profit targets to daily long setups, and then we had gone through them. And that created extensions. Those extensions failed on Friday in the pre-market timeframes. And that's where we had this room for the indices to rally. And we were hypothesizing, because there was this room for dollar weakness, that there would be a breakout on the S&P 500 as we went into the end of the week. You can see that breakout here on Friday and then again on Monday. And the markets diverged, the indices diverged from the dollar up here in the intraday timeframes as well too. And then the dollar just started rallying away from its support level, just like we had last week Monday. We had a 5 pip front run of the euro, and the dollar is continuing to strengthen. And as we went into our morning timeframes, it was important to note here that it was over. There was no more room for the indices to rally. They had run out of dollar weakness. They had run out of bank strength. They had run out of the VIX had completed its profit targets and is running into its old contract lows to highs. There was nowhere left for the indices to go. But here's what's interesting is that the dollar has a pullback that has the potential of leading us into a continuation of the trend. This is very similar to the pullbacks that we actually had at 10 o'clock on Tuesday morning last week, in a pullback from our lows on Monday to highs. Look at that pullback that we ran into. That's what we're watching for here. It's like we have a deja vu week. And then what happens to the indices if we make this pullback and defend and then lift off away from it again? Well, the indices will rally initially, and then they could defend a Monday's highs to lows. And I'm going to jump here, remember that for a moment, and think about this from the perspective of the VIX. The VIX is coming halfway back from its Monday's highs to lows. So wait, the dollar has a Monday's lows to highs. The VIX has a Monday's lows to highs. We're watching to see those pullbacks if they defend on the dollar and the VIX. If the dollar rallies and the VIX rallies, the indices roll over from the inverse of those two setups, which is a Monday's highs to lows. Now, here's where we bring in gap fill statistics. Here's where we bring in gap fill stats. Gap fill stats for Tuesdays they're very good. This is the best day to anticipate a gap fill. Over the last 180 days, we've filled 73% of our gaps. If you look at the last 90 days, we've completed 68% of our gaps. That's an edge. But over the last 50 days, we have not filled gaps. There's a 50-50. And so what you could conclude is that on most of our Tuesdays that haven't filled their gap, what has been going on? Well, they've probably been outside of the 20 handle. You can see here over the last 180 days that if we open up at 9:30 a.m. Eastern Standard Time outside of the 20 handle, we only have a 57% probability of filling the gap. If we open up inside of the 20 handle, there's a 67% probability of filling the gap. That's quite a difference there. That's why we see those edges at the 20 handle. And so you'll notice here when you're looking at half gap fills, well, the half gap fill is an 86% probability of filling the gap. You can see a 79%. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.